it's official. Bitcoin just recorded its worst quarter in over a decade. What is in store next? Are we going to fall to new lower lows, or can we start to begin a recovery? We're going to take a look at the charts. We're going to look at the key levels. So make sure you hit up the like button. Don't forget to subscribe. As always, guys, if you want to buy any of these cryptos, you can do so using BYBIT or BitGet, two of the exchanges I personally use. Links in the description. Now, as you can see with Bitcoin, over the last 24 hours or so, we've had a bit of sideways action. You can see here we've not really moved. The day before, we had this manipulation, which we saw wicking us all the way up to 21,000. You can see that wick right to the top side there before then coming all the way back down to 18,900 here. And then it's just been a bit sideways ever since. Now, what is in store? Do we expect this to be the sign of recovery, or are we going to fall to lower lows? Well, first, we need to take a look at the fear and greed index, which is sitting at 14. We're still in extreme fear in this market. People are extremely worried, and that is further evidenced by this chart, which shows you all the number of times that Bitcoin has been declared dead, right? So let's just pop me over there. You can see all the way since 2011 here, all the way up to date, each dot represents an article that has been recorded signaling that Bitcoin is dead, or it's done, it's over, Bitcoin is over. As you can see, we've seen it happen time and time again, and we don't allow this to distract us from our long-term conviction of why we're invested in crypto and why we believe particularly in Bitcoin. Now, if we look over at the wider market, you will see that the S&P managed to get a rally on Friday heading into the July the 4th weekend. And you can see the Dow Jones was up 1%. You can see 1% on the S&P and almost 1% here on the NASDAQ. But do we really think this is going to last? Well, there's a few worrying things going on. The first of which is Russia continues their conquest over in Ukraine. Now, this has now turned from what could have been a quick and easy war to what many investors are now pricing in as a long, drawn-out war. This now has the potential to be a multi-year long war, and we've seen how that can therefore drain on economies and inflation. We've also seen this latest bit of worrying news, and that's the fact that there's a massive pileup of furniture exports bound for the US, and it's spreading across European ports. We've got a massive build-up, and the labor slowdowns and strikes are crippling container trade at both German and Netherlands ports. Now, what is this going to mean for global inflation? It's going to pick up global inflation, right? This is not great to have more supply chain bottlenecks, and is further going to make Jerome Powell's job of bringing inflation down a little bit more challenging. And all the central bankers across Europe, right? They're all interlinked. So to think, oh, that's just Europe, we don't need to worry about that, that's not quite how it works. These furniture pieces are coming into the US from Europe, okay? So very, very important that we take a look at that. Also, we've had some crazy news around KuCoin, right? Some crypto influencers were spreading the news that KuCoin could potentially be going bust, right? Could they be falling the same way as Celsius? And we saw a bunch of people spreading what you could call FUD, but we don't know, saying that you should take your money out of KuCoin. They're trading insolvent. Well, all we do know is that the CEO of KuCoin, Johnny KuCoin, came out and he posted this. He said, "Beware of FUD. Not sure who's spreading these sheer rumors and what their intentions are, but KuCoin does not have any exposure to Luna, 3 Arrows Capital, Babel, etc. No immense suffer from any coin collapse, no plan to halt withdrawal. Everything on KuCoin is operating well." He then says some recent facts about KuCoin, and you can make your own judgment. We finished $150 million fundraising at 10 billion valuation in May. We are one of the few platforms that are still hiring. We are more active in the bear market, launching new features, etc. Okay, so he's coming out and saying, look, it's a bunch of FUD. Guys, at the end of the day, I've shared my message very straightforward, right? My non-financial advice is you should not be trusting any exchange right now with your coins, particularly if you're doing it to try get some yield, right? You should not be chasing 4%, 5%, 6%, 7%, 8%. None of these percent yields matter right now. You just need to hold on to your coins. For this bear market, if you've not been for a bear market before, it's all about holding on to your coins and making sure you live to fight another day when the price recovers. When the price recovers, go ahead and put your money back on exchange. But it's good practice to hold your keys on a hardware wallet, at the very least, guys, in a software wallet, which you control the keys of. Very, very important. Not your keys, not your coin. Now, I'm not going to say, which exchange is suffering, which one is not. And FUD can be dangerous. I'm going to explain why, but do make sure you've got custody of your coins. Now, coming on to why this FUD can be dangerous, remember, you are getting a lot of coordinated attacks. We've spoken about this before. If you're a competitor of another exchange or you're a multi-billionaire in the space, it's perfect for you. I'm not saying this is happening. It's perfect for you to be able to just whittle out a few messages out there, put a coordinated attack together, and within a couple of days, there could be a run on any exchange. Right? So today it's KuCoin. They can pick any exchange and they can spread the fear. Everybody's going to withdraw their money. And then obviously the exchange will then be insolvent. And then guess what? These billionaires, like we've seen, will come in to swoop in with a credit facility or to buy shares or to buy the company out. So you've got to be very, very careful. That being said, it is really important we practice holding our coins, but don't fall for any in particular FUD just spread out by a couple of influencers on Twitter. That could easily be manipulated. And in this delicate market, it just takes a couple of those messages and companies could literally be spiraling out of control. So we do need to focus on building and not spreading FUD in this moment. We just need to be doing the right things which are going to be good for us long term. Speaking of which, let's get a quick update on what's going on with 3 Arrows Capital, one of the victims, one of the biggest crypto VC hedge funds. If you don't know what happened with them, I'll link the video up here so you can go and catch up. But they've now filed for bankruptcy in New York, tied to Virgin British Islands. Okay, so this is Suzu, one of the 2 co-founders, and they've gone ahead and filed Chapter 15 bankruptcy in the Southern District of New York. So we'll see how that plays out and what that means. Voyager Digital also decided to temporarily suspend all trading, withdrawals, and deposits. Shares of the troubled digital broker plunged more than 26% in US trading on Friday. I mean, it was already super low, but yes, they really did struggle. We made a breakdown, guys. Go watch the breakdown. It was crazy how much exposure Voyager, a public listed company, had to one unsecured loan to 3 Arrows Capital. So go watch that video. I have a nice rant about how irresponsible Voyager are, and this is disgraceful. This is horrific. We also know BlockFi's in a bunch of trouble as well. Obviously, FTX swooping in to pick them up, and then we've got Genesis as well, facing hundreds of millions in losses as 3 Arrows Capital exposure swamps crypto lenders. And we know, guys, we've covered this off. I explained in one of my videos that this is all emanating from the UST and Tether collapse. I mean, you can trace it all back to how that has caused this cascading effect to all of these guys. Now, it doesn't mean all of these projects aren't responsible for themselves. They do not get a jail-free card, right? They are all responsible for their misallocations, for their rehypothecations, for their bad practices and their unethical practices, right? And therefore, in that sense, they as companies deserve what happens to them. But it's unfortunate that so many people with their life savings, normal retail investors, are getting affected by the bad practices of 3 Arrows Capital, by the bad practices of Celsius, by the bad practices of DoQuan and Terra, and then BlockFi and the rest of them. Where is risk management for these companies? They're worse than traditional finance, guys. Worse than traditional finance. And you know what hurts more? Is when you go onto YouTube or you watch these interviews from traditional finance blokes. What are they saying? They're saying, I told you so. I told you so crypto was horrible. And that's embarrassing because we were trying to build something different. We were trying to build something and we were looking down upon traditional finance as doing all these malpractices. But guess what? The leaders we allowed, the leaders we put on a pedestal to run the biggest companies in the crypto space, they're exactly the same practices, the same tricks, if not worse, in an unregulated space. So if and until we don't resolve all these issues, if and until we don't get rid of greed, if and until we don't get rid of huge leverage trading, if and until we don't get rid of poor, shoddy, grade 1, lack of risk management, we are not going to progress. We are not going to have a long-term sustainable asset class that we want to get to multi-trillion dollars, right? We're just not. So we need that reality check. And until that reality check comes, we're going to continue having this volatile asset class where a lot of people are losing money. A lot of people are making money who are on the wrong side of the long-term ethos of why we want to build this. Okay, so rant over. What else do we have going on? Well, I shared this with you, but we've also got, if anybody remembers, before I come on to the miners, I want to show you this. Those of you who remember from a long time ago, KuCoin. KuCoin was many years ago. She set up one of the first Ponzi's in crypto with something called OneCoin. For those of you who remember this, it was also covered off in the Netflix documentary as well. Basically, she managed to defraud about $4 billion from investors. And guys, it doesn't feel like we've moved on. This was years ago, 3, 4, 5 years ago, and we're still there. We're still there. But now she's on the FBI's top most wanted list. You guys can get $100,000 reward if you know where she is. We're in a bear market, guys. 100K. I mean, give her up. If you know where she is, give her up. Right, moving on. We then have this, which is a very interesting piece of data I wanted to share with you. Shout out Julio Moreno here on Twitter, because we were talking here for a while about we've not quite seen the miner capitulation come in yet. We saw that the miner's cost basis was around that 17,600 level. And we saw that that's interestingly exactly where Bitcoin bounced from, exactly where the cost basis long-term of the miners are. Now, what we have seen was some miners selling to cover their operations. And naturally, they're going to have to sell more to cover their operations. Remember, you've got to pay labor, you've got to pay your expenses as a miner, and you've got to pay that in, say, fiat currency, in US dollars. So they've always had to sell Bitcoin to fund their operations. But naturally, in a bear market, you have to sell more of your Bitcoin reserves to get the same number of dollars back to pay for your expenses. So it's not that they're selling more because they've suddenly lost conviction, but they have to fund their operation. And what you can see here now is you're starting to see that capitulation come in, right? You're starting to see more and more sell pressure, but I wouldn't read too much into it that, oh, it's them giving up. There's two things going on here. One is what I've explained. They've got to sell more to cover the existing cost because Bitcoin is so suppressed in price. But also you have newbie miners as well who've just come into mining late. They've not managed to get themselves set up, and it's very difficult for them, so they're going to capitulate a lot easier. The veteran miners who've been around for a cycle or two, those guys, there's no evidence just yet that they're selling in huge amounts. Okay, so there you go. That's the miner update. Now coming back onto the Bitcoin price, what are we expecting here next? Well, we've got the EMA ribbon here. You can see hourly pressure from the EMA ribbon definitely giving us downward pressure. I don't expect this sideways action to remain for too long. Sooner rather than later, I think we're going to start heading back down towards 18,600 here on the hourly chart. Now, if I head on over to this version of the chart, I do want to share this pattern with you, because on the 4-hourly chart, if you remember, we're in this big green wedge to the downside. In fact, let me zoom out so you guys can see we're in this big descending wedge, okay, here on Bitcoin, with the price falling for quite a while. But within there, we've got this rising wedge, and we broke down from this rising wedge. Now, the technical pattern to the technical target is right at the bottom here at the lows of 17,600. Now you can see we've had a little bit of a cooling off here, but I'm still expecting us long term to then, not long term, but soon to fall back down to this level to test 17,006. Now, whether we get a little bit of this, whether we get a little bit of a run back to 20 before then coming back down, I'm not too sure. We may well get that cooling off. I mean, if we bring out the EMA ribbon, there we go. You have got a little bit of room, I guess, for it to run up. I don't think it's going to run up as far as 20, but it could run up well into its EMA ribbon before then getting rejected back down to the downside. So don't be surprised if you see something like this, up and then back down, up, and then start working its way back down to 17.6. Okay, so that's what I'm watching out for here on the Bitcoin chart. Tough time without a clear end for when we're going to run up back into the green. But remember, these are the moments you're going to be looking back on. You guys were here in previous cycles. These are the moments you're going to be looking back on and saying, that was insane. We've never had months like that. I mean, Voyager, Terra Luna collapse, Celsius, BlockFi, fears around KuCoin, Genesis, Babel Finance, 3 Arrows Capital, so much going on. US inflation, supply chain bottlenecks, Russia declaring a war on Ukraine, which we've not seen in, that type of offensive in decades. This is insane, and it's all coming together in this one period. And this is the period we have to decide, what are we going to do? Are we going to give up and quit? Or are we going to build our conviction and continue to buy in that fear with sound risk management, only risking what we're willing to lose and practicing good risk management, unlike the others we've just shared this video. Guys, don't forget to smash up the like button and subscribe. Have a good weekend wherever you are. As always, if you appreciate this type of content, make sure you let me know. Do check out BYBIT and BitGet to support the channel. Use my affiliate links in the description, and go watch this video, and I'll see you in the next one.